Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 4th, 2010. Well, an interesting day on Wall Street today. We started out with a little volatility, initially gapping slightly higher before reversing to the downside as the dollar took off to the upside. The dollar overall is positive, and that is generally pushing the markets, keeping them in check. However, you had some good news this morning, and that's keeping the markets higher overall. So again, flat to positive market. Really the third day in a row we've seen this flat to positive market. The interesting thing about this is we're waiting on the non-farm payrolls tomorrow as the key indicator. And again, we get the unemployment rate and the non-farm payrolls tomorrow. And again, that will be the big news of the week. And everyone's kind of been looking towards that number to tell exactly where this market's headed. Now, again, as I mentioned, you had some positive news this morning. You got retail sales out and really some spectacular retail sales numbers and some numbers on earnings and estimates and so forth. For instance, A&F, guys, Abercrombie and Fitch here. Take a look at that move, up $4.66 on A&F, and that is just soaring today. In addition, you can take a look at dollar stores, also another positive report out of them, up $2.80 just off the highs, but nonetheless on a $35 stock. That is a sizable move. There are many, many other players out there that are having decent days. If you take a look here, Walmart is slightly higher. The key with Walmart is they really don't report interim sales numbers every month from their stores, like same-store sales or anything like that. But they did raise their dividend today, and that's giving Walmart initially at least a little bit of a pop, and it's keeping it positive today along with the rest of the market. Overall, just let me go do a little check on the Dow, the S&P, and the NASDAQ. The Dow is up 21 points, NASDAQ is up 3, and the S&P 500 is up 1 point. So as you can see, I mean, if you look between the last 3 days, the markets essentially have gone sideways for that period, and it's all leading up into that key unemployment and jobs data tomorrow that we're going to be getting out at 8:30 a.m. Eastern Time. The market will be on pins and needles for the rest of the day, probably trading sideways, I would guess, overall into that report tomorrow morning. And again, I don't expect anything major with the futures until we get that number out overnight in the pre-market session. Okay, now a couple other things, folks. We can go back to the SPY, but I just want to touch on jobless claims numbers today. Jobless claims were reported, and the key with jobless claims, folks, was that the number actually was a little better than Wall Street had expected. The last two jobless claims reports, last Thursday and the previous Thursday before that, we have slowly been inching back towards 500,000. Very, very bearish numbers. The market overall has seen a little bit of a pullback off those numbers, but overall, again, looking back over the last couple of weeks, it wasn't anything major. Even though those numbers were very, very bearish, markets seem to hold their own, mostly because the dollar has been slowly trying to pull back off the highs, and we all know that the dollar, if it comes down, generally will lift the markets up. Now, the key about today, folks, that it continues to kind of be amazing is we got a jobless claims number that was pretty positive. It was 469,000, down 29,000 from last week. So actually a little bit of a gain there, or a lowering of the jobless claims out there, and that did put a positive spin on the number right there. Having said that, we got pending home sales at 10 o'clock, and you can see part of the sell-off today was right around that 10 o'clock time frame, and that is partly due to those home sales numbers. But pending home sales, folks, dropping over 7%. That's a very, very bearish drop. And the key with this number that tells me that there's more downside in the housing market is that the first-time homebuyers tax credit essentially is coming to an end here very shortly, and that, folks, should have kick-started some more buying. At least that's what the government had hoped, with that people, by extending that tax credit, people would have jumped on the first-time homebuyers and picked up houses, and they haven't done it. Obviously, but seeing a number here just before it ends at down over 7% is a very, very bearish indicator for housing. That tells me, first of all, housing has not bottomed yet. Prices will continue to drop in the not-too-distant future. For probably the next 6 months to 12 months, I expect a little more downside on housing. And again, nothing crazy at this point, but you still should look for a little bit more on the downside there until we hit a bottom maybe in early 2012 or mid-2011, mid-2011, I'm thinking, at least at this point. All right, so that's what I'm seeing right now, folks. The SPY, interestingly enough, yesterday we hit this pivot high. Today we hit this pivot high. I mean, each level is working out beautifully. Look at this nice little pivot low, pivot low, pivot low. Triple bottom right there, folks. The interesting thing about this is, look at this. You can draw a head and shoulders pattern here amazingly well. Take a look at this head and shoulders pattern on the markets. All right, right here, right there. So again, what I can do is I can shrink the chart just a tiny bit. Look at that. Up, down. There's your left shoulder. Up, big head right there, a high pivot. Always the high has to be the head, since again, the shoulders aren't above the head. And then right there is your right shoulder. If you break this blue line, the key right here, this blue line right in this area right down here, this is the key. If you can take that out, close and confirm below, you will see some excessive selling on this market with a possible target. I repeat, a possible target all the way down to 111 or so, high 110s to 111. That would be the target if this plays out. Okay, so just keep an eye on this over the course of tomorrow. Now, if we stay above it, they could push this market back to 113. So it's really a pivotal level that you want to be watching on the intraday basis. And again, I only really discuss the intraday here because our research center supplies our premium members with everything they need to know on a daily basis, looking towards tomorrow, the next week, the next month, about how to position themselves in their 401ks, IRAs, individual investment accounts, including picks. Entry levels are posted live as we get them. We just post them as I buy things. I post them live as swing trades and so forth. But again, that's focusing more on the swing trader in the research center. If you're more of a day trader, then the chat room's for you, and I can cover a little bit in here just to guys kind of show you what we do here at In the Money Stocks with our key analysis. So head and shoulder pattern right there, that's a key that you want to be watching. Again, you can see how this level held up so well today. That was a buying opportunity we talked about for a little bit of a scalp. We talked about it and took it. Beautiful little bounce right up there. All right, now a couple other things to go over on this 10-minute chart. Support-wise, this is, again, key support. Notice the 200 moving average is rising into this. I think you're going to come back down, hit that 200 in the not-too-distant future, but then again, you might bounce up because it's the 200, and it's going to be all coinciding inside of this little neckline. But at some point, I think you do break to the downside there over the early next week period and possibly sell even more. So keep an eye on that, guys. Very interesting pattern development. In addition, what I want to do is just erase these trend lines and show you guys one more thing that I think is fascinating, and this is just going to how important trend line analysis is, and that's what we do, guys. We're trend line analysis, price pattern, time players here, and it's very, very rare to come across this out there. You don't find many people that can do this as well as we can, or even do it at all. But bottom line is, take a look at this, guys. I want to just extend the chart again. See this high right here? Look at this. How amazing is that? Trend line to high, and look at where we popped here earlier. Now, if we pop into that, that's resistance again. But remember, there's a key methodology signal here that tells you the more times you hit a trend line, the weaker it becomes. So if we do pop up into it, which at some point I do think we do today, there's a small chance we could go through it. Volume today is unbelievably light, folks. 93 million on the SPY. Again, we're kind of right in line for another kind of lightest trading day of 2010. Notice how these trading days of 2010, all week, last week, they've been unbelievably light in volume, and it's generally been sideways to up movement in the market. That has to be alerted to you. That tells you institutions are not playing ball. They're not loading up here. That has to be something that you recognize and understand, because it's going to be a key play later on when the market makes its next move. And again, when it does or where it goes is going to be what we're going to be telling our research center subscribers at InTheMoneyStocks.com. All right, so just again, guys, keep an eye on that trend line. If you get above that trend line, you'll go to the high of the day here. And if you get through that high of the day, which is at 112.75, then you could easily test the high from yesterday as well. Interesting to note here, today the sell-off, really each day the sell-off has been starting earlier and earlier, and the bounce has been kind of more and more early as well, or earlier as well. If you go back to, I think this is Tuesday, the sell-off started right around 2 o'clock. 1:30, 2 o'clock, we sold off a small bounce into the close. Yesterday, on Wednesday, sell-off started at 11:30 a.m. Eastern Time, and then we had a bigger bounce into the close. Today, the sell-off started even earlier at 10 o'clock, and then we've gotten a little bit of a bounce the rest of the day. The question is, are we going to continue to rip up into the close here ahead of the jobs number tomorrow, or are we just going to trade sideways, or are we going to trade down? And again, how are the expectations for that number tomorrow? Right now, I think people overall, based on what Volcker said, I believe it was, no, Summers came out and said something about how the snow may impact the number on, so kind of tempering the kind of Wall Street's expectations for that number. That, again, folks, has to be factored in. So you would expect a little worse than general number. If it comes in far worse, you'll sell. If it comes in better, you could see a little bit of a push up tomorrow. We'll watch very closely. Also keep an eye on that dollar. That will dictate everything. All right, so fun day today, guys. Some good moves early on. Still the afternoon, very light volume early in the afternoon here, middays. But this is where the volume was, the action was this morning, and there were some good trades here as well in the money stocks, including continuing to post, looking to post more of these swing trades for you guys that are premium members in the Research Center. Have a wonderful day, folks. We'll talk to you later.